What's up, guys? Tuesday, February 24th, trade recap, and it's another L. Today, we came into it with a pretty decent bias, I would say. Had a good game plan, everything, and then when it came to execution, there was a couple of mistakes made, which is great for you guys because you get to see what not to do. But also just really rough price action as far as finding an entry. There's two things I want to show you guys on like why it was rough. One thing that I did wrong, what I should have done, and what I probably could have done in hindsight. And as I'm starting to record this, as you'll see in a second, we actually just hit my original TP. But yeah, today down across all accounts, 1406, $1,406.01 technically, which I'll show you guys here in a second. And yeah, I mean, just a kind of a rough day, but good recording. So let's go jump into the screen real quickly. Here you guys go. You can see $468.70 across three accounts. Puts me at the loss of $1,406.01. Yeah, 1406.1. And you can see we just smashed my TP. So yeah, we'll break down that everything. We're gonna do pretty, same old stuff. Come into it with what is our bias. Today was a little more difficult than ideal, but still we were able to pull a good read together in the pre-market session, which definitely helped us have some ideas. And we paired ES with this quite a bit, ES and SPY and QQQ and all that fun stuff. So right here, if you look, you can see just pre-market session, and I'm gonna go over this real quickly, just so you guys learned it's not super complex. But we are accumulating pretty much since open of Asia, which is right there on this wick candle. All of this pre-market had been basically chopped. Okay, and if you want to extend it to the London and technical Asia lows, as you can see, you can. So we came in with a little bit of accumulation. Let me make sure 945. Click. Yeah. All right. We're chopping. We look over to ES, it's the same thing, except for it, instead of just being pre-market, you can see it's everything from yesterday all the way up until about these highs. In the pre-market, we are just accumulating, right? So right off the rip, when we see accumulation like this, there's something that's pretty obvious that should pop in your mind: the AMD model, accumulation, manipulation, distribution. So we came into it with a bullish bias, but we wanted to see the manipulation first. And it's exactly what ended up happening. Once we saw that, of course, in pre-market, we're marking out key spots. We're like, okay, cool, we got London lows here, which, if I remember correctly, London lows was also an intermediate low. I don't remember the time frame. I guess it wasn't. I thought it was. Maybe it was on the ES. The London low was an intermediate low or something, and we got to pair it together, which is awesome because, it just creates more importance out of it and more of a target. And of course, we had, pre-market, or I guess previous session highs up here at London highs. So really coming to the day, I was like, cool, I want to see a manipulation of either side of the range on either one, ES or SPY. And we can look for a long out of it. Really just that simple. I'm actually going to just let this play out all the way and not really use replay mode, just make it kind of easier in you guys' eyes. So right here, you can see previous day low, London and Asia low, London highs, and then up here we have a 1 hour intermediate high, as you can see, this fair value gap, and then we have new week opening gap. Okay, that new week opening gap is super duper important. It's a strong pull, strong magnet of liquidity. If we look over on SPY real quickly, you can see yesterday morning SPY and ES actually filled its gap, but Q's did not. We had a partial fill. All right, and just took out previous day high. So we, still had a target. If we could see it get over 66 or 607, get a nice hold, that'd be great. And then of course with SPY, it was more, okay, cool, can we maintain this range? In pre-market, I said I don't really want to short under 681.5 because I don't really want to short down into 680.5 or the 600 mark on Qs. Because if you look, you can see just about this entire $2 range. It's like 599 to 601. Had some nice holds over the last couple days. Not really a spot that I want to be shorting into, just in case we find some buyers out of it. Not of interest to me. I'd rather wait for it to really come down, maybe overextend, look for some type of longer retracement. So if we had gone lower, I was going to sit on my hands, not try and chase a short. Really, really wanted to see a manipulation, but ultimately wanted to see us push higher towards a new week opening gap. Now, right after market open, you will see real quickly here that we also had a very nice SMT. Okay. If you don't know what an SMT is, it's where the two correlating assets, NQ and ES, diverge, where they're not correlated. So as you can see right here on NQ, yesterday's low of day was still the lowest point this morning, right? We didn't sweep down under it and take out 668 on NQ, but if we look at ES took out its previous day low. This is what we call an SMT, where they're uncorrelated. Now, in simple terms, if we are focusing on the bottom of the candles for the SMT, it's a bullish SMT. And your target is in between the point A and point B and the highest point between those, which would be, of course, previous session highs, Asia highs on ES, and then it would be London highs on NQ. So that came in. That also, reassured our bias. Now that's post market open, but pre-trade, and we just swept and manipulated all the key points, right? So we have accumulation, manipulation, right? And this is where my ears are perking up to find a trade. So if we come into it, into the morning drive right here, we were looking for some type of fair value gap to invert. Remember, we're looking for the leg that has a singular fair value gap. So the 2 minute, we have one here and one there. No bueno. We go to the 3 minute. Okay, cool. We have this one. Okay. Now, the top of this fair value gap is 797.25. If I drag this over and zoom in, we did not invert that fair value gap. This is why it was super annoying, because I wanted to take this trade. I had very high confluence in it. However, it didn't check all the boxes. So sat on my hands, watched it blow past me all the way to Asia high. And I mean, let me tell you, that was the trade. This was, in fact, the trade to take today. Great risk to reward, great target, great everything. I mean, truly the most perfect trade that I could have asked for, transparently. Manipulation, inverse, bam. But we didn't technically get the inverse, so I had to sit on my hands, which really, really threw, a nail in my coffin and kind of pissed me off. Now, that was okay, because with the just amount of extension we got, I was saying on the 5 minute, we'd probably want to see some type of pullback out of this complete extension that we saw, pre-market or not, post-market open right here. We want to see a retracement, maybe can look for a break out of it to push higher into new week opening gap. And it was exactly what we sat around for after that trade, waiting on. Before we get into that, I believe ES actually had the better one if we go look for that example too, which kind of sucks because I should have taken it. Yeah. So ES, here's the same fair value gap. We completely inverted it, and then we did end up taking out the exact target for the SMT. So if we were to set that trade up, now as far as point math and whatnot and like tick math, tick value, I don't know it off the top of my head. Say we get an entry there, we have a stop under there, so call it like $500, just shy of it on one mini, up to 25. Great risk to reward, great trade, great entry. It checked all the boxes. You could have even gone with the 4 minute, except this is pre-market. It's the 29-24 candle. So up to you and your discretion of that. But yeah, decent trade. ES just, again, having the better opportunity. So we missed that one. Then, we waited for the pullback. And this is where things got where mistakes were made. We came into it, and I'm going to delete this line. And the target, again, new week opening gap, and this fair value gap. I think it's a 1 hour fair value gap. Yeah, or intermediate high. 1 hour intermediate high, because there's a 1 hour fair value gap over here. So that was the target. Potentially, if we get just like absolute strength, we push up to 64. We come into it. We're getting the retracement. And I'm looking all within this range for the fair value gap I want to invert. That's all I'm looking for. Right here, I see, okay, we have a very baby 2 minute fair value gap, or 3 minute. Maybe I want to take that. We go to the 4 minute. Okay, we have this. Then we go to the 5 minute, and we have this. Okay. Now, the rules, simple rules, this is where mistakes were made, is I have to wait for the highest time frame between the 1 and the 5 to invert its fair value gap. So in this instance, it is the 5 minute. It is the 5 minute, but I tried to get cute and I took, I believe, if I remember correctly, it was this wick high, right, that we're on, to this right here. Let me make sure this is accurate. And I wanted to see a 2 minute inversion. I got a little cute and a little creative with it. So when we waited around, click through it, bam. That was my entry. That candle close of the inverse of that, and then just instantly straight back to my stop loss. So paid the piper on this, jumped the gun, didn't stay, didn't, wait for the A+ entry, and I paid the piper. Right? It's part of breaking your rules. It's just, you make mistakes, shit happens. The goal is not to make mistakes. So I got stopped out only by a couple points. I think it was like under 10 points, and then just, came right back and went off. Now, what I should have done is wait for the 5 minute inversion, right? Because that would have been this entry. Let's grab a long. Bam. Stops under here, and I'll show you why I didn't take this as like a secondary trade. I wasn't a fan of the risk to reward, right? I wasn't really a fan of risking about $700 to $1,400 to make this trade-off, the 1 to 2. Okay, I personally really like a 1 to 1.5 or anything above. So this didn't really check that box. I just didn't really trust price action. I'd already taken a loss, so I was going to be taking 2 trades, which I'm not a fan of doing. And yeah, so I kind of sat this one out. I watched it and I go, man, I technically should be entering. And sure enough, we danced around for a little while, which I was waiting to start this to see if we would hit my TP. And of course we did. But yeah, that's just mistakes were made. I should have waited that. Now, what I should have even done again is come to ES and take its 5 minute inversion. Because if you look, the risk to reward is significantly better. It's the same 15 minute fair value gap. Right, and then we didn't have, we had this wick here as a 1 hour intermediate high. Trying to make sure I don't chart ES as much. See if we got any 5 minute objectives up here. Yeah, we could have even targeted like this 5 minute fair value gap. Hello, I didn't click it. This 5 minute inversion or fair value gap, right? Potentially even up there if you wanted to. But so I mean, just the risk to reward is better. So 1.6, and on this you're risking $500 to make a little over $500 is 15 or $50 per point. So risk was better, trade was better, entry was better, ES was just better. ES has been better all day long, and I'm primarily focused on NQ. So I just didn't catch any of those trades, and yeah, ended up in losing $1,400. So really simple. Again, just to recap everything, it's the accumulation all throughout late day yesterday and the pre-market. We got a manipulation right off market open. We're looking for the distribution up into new week opening gap because it's a strong pull on liquidity, except we broke the rules, and we broke a rule, didn't get an entry, or we got an entry, but it wasn't a good one. And then we didn't even get a true entry off of this 3 minute by literally a point, may I add, right there, which was super duper annoying. Some of you may be like, oh, well, if you're going to break your rules and, lower time frame, right, why not, take that half a point? And I understand that logic, and I think that's a valid thing to say, but it's not even about what could I have done, I guess. It's what I did do. That's why this is this. So just to recap, don't break your rules. Look at ES and 1 trade a day, which I did do. And, just simply don't break the rules, right? Because if I hadn't broke the rules, I would have taken this trade, right? Because it is one risk for 1 trade, It's not the greatest risk to reward, transparently, but I could have lower sized, right? So let's say instead of risking $700 down here, maybe I took half and I risked $350 to make 450, right? The risk to reward truly wasn't amazing. I could have pushed it to a new week opening gap and it would have been better, but as you can see, we're not really getting it. And this part of the market, this chop sesh, really, really showed that volume was low. Today had already kind of used its fuel. I have a feeling that we're just going to dance around up here until eventually we get a small pop, fill the new week opening gap, and then we'll make the move from there, right? Because that's like the shift of the gear. But yeah, overall, I mean, just part of it. Still green on the month, thankfully, but part of the day. Now, again, guys, so I do leave tomorrow morning. I'll be gone for 6 days, basically a week, because I won't really be trading from my setup until next Wednesday. Therefore, some of the content's going to be a little different. If I do take a trade, there will be trade recaps and everything, but just going to be, a little slower on the other content. Again, if you guys aren't following me on Instagram, highly recommend it because you're really going to get to see behind the scenes on the Instagram. It's going to be pretty cool. But yeah, overall, we had a good read. We had, everything, just couldn't align with the markets, and then we broke our rules, and that's why we lose money. That's what happens. You break rules, you lose money. So hopefully this, guys, can help you, show you what does happen if you do break a rule. So if you haven't been tested on sticking to your rules, use this as a reminder to when you are tested, stick to your rules. Don't break them, because just like in anything in life, if you break a rule, there's typically a punishment, and in the market, it's paying money. So hopefully this helps. If it does, let me know below. I hate to say it, but definitely subscribe and like the video. It's free. It costs you guys nothing, and it actually really does help me. So please do it. It'd be great. And yeah, tune over to the Instagram. There's going to be a lot more content, short form content on the stories, and maybe a couple posts every now and then over the next 6 days, so that you guys can see what Puerto Rico has to offer. Hope you guys had a good day. Hopefully you're green, and I will see you guys in the next trade recap.